And we're so thrilled that you all are here to join us for today's talk. Give me a moment. So this will be our 10th D'Amore-McKim School of Business COVID-19 Resilience Talk, and this will be the second one that Bob Lentz is moderating for us. So we are definitely in for a treat. Just as a bit of background for those of you joining us for the first time, my team started this resilience speaker series back in, late March, once we all started having to work remotely as a way to bring together our alumni community, bring value to you all, and hopefully speak on topics that you may not have, you may not necessarily get in a room with some of these folks on a regular basis just due to how busy everybody is. So this has been a really great way for us to all feel and stay connected to one another for the past few months. A few pieces of housekeeping before we get started. Just as a note, this video will be recorded because we're going to be sharing it with all of our alumni of Northeastern University following the talk. So please keep that in mind. We will be managing your video and audio. All will be kept off for the call so that it will help us get a clean recording. So please don't unmute yourself or turn on your video. I encourage you to use the speaker view so that you can, instead of seeing a bunch of black boxes on your screen with names in them, you can see this person who is speaking at the moment. And we encourage you throughout the talk to write any questions that you have into the group chat. And once we get to the Q&A section, our panelists will do their best to answer them. So without further ado, we are thankful to Mr. Bob Lentz for hosting today's conversation and bringing together 3 ventures founded by Northeastern alumni. Bob has been an executive professor and entrepreneur in residence at Northeastern for over 8 years and is an integral member of our entrepreneurship community. In addition to his classes, Bob serves as an advisor and coach to many student ventures. Prior to joining the university, Bob was a consultant serving as interim CEO for tech companies, where he managed the growth and eventual sale of a number of successful ventures. Bob is a proud Northeastern alum and holds an MBA from Babson University. Without further ado, I hand it over to Bob. Thank you, Bob.
Well, thank you, Debbie, and thank you all for joining today's call. So my objective today is to explore the challenges that 3 of our successful first-time entrepreneurs and CEOs have been able to have them share with them some of their successes that they have achieved in launching their businesses, proving product market fit, each have accelerating revenue, have gone out and raised outside capital, and then pow, all of a sudden they're faced with this unprecedented curveball, coping with the corona. So I want to dive into, with each of them, how they're dealing and coping with this pandemic and its economic impact on their business, as well as how they're responding, both in changes that they're making, actions they're taking to fix their business because of the uncertainty or the impact of COVID. Also, how they're taking advantage of opportunities that are presenting themselves as a result of the COVID situation. And lastly, I would love them to share how they're personally dealing with it, how their psyche is dealing with all the challenges of watching a business that they've been so passionate about being impacted by this challenge. So I'm very fortunate today to have 3 NU alum. It's personally very rewarding for me because they were all part of the IDEA program, Northeastern's Venture Accelerator. And so I'm pleased today to introduce Kate Weiler, who's the founder of Drink Simple, Lyle Stevens, our founder of Maverick, and Zach Sheffer, founder of Elsen. First, I'd love for them to each introduce themselves, to tell us a little bit about their journey of how they got to where they are, tell us a little bit about their business, and just tell us more about the accomplishments they've achieved. So first, let's turn it over to Kate. Kate, it's been so long since I've seen you. It's great to have you participate.
Yeah, thanks,
So,
Bob. It's
Kate.
great to be here. So yes, I am one of the founders and CEO of Drink Simple. So we harness the power of trees to create delicious maple water. So this is the water that's coming from the tree. It's a natural hydration, similar to coconut water, but half of the sugar. And we started 6 years ago, part of the IDEA program. I've been involved with some board of trustee meetings, sharing our products there, and then also most recently with Huntington Angels, the student-led group to facilitate fundraising efforts among alum and alum groups. So been really involved and been great to be part of some of the resources at Northeastern.
Tell us a little bit about how your company's doing and, the successes you've had, your reach now.
So pre-COVID, we've been able to grow the business where you can find us in this area at Whole Foods, Market Basket, Stop and Shop, Shaw's, Star Market, Roach Brothers, Wegmans. So we've been able to get good distribution, and more importantly, we've been able to get great velocities and pull off the shelf in this region. As you mentioned, with raising capital, we have raised a bunch of outside capital. Our lead fund is Cleveland Avenue, who is the former CEO of McDonald's, Don Thompson. And I think beverage is extremely cutthroat and difficult and very, very competitive. And we're proud to be, most beverages fail within 3 years. So we're proud to keep on going, keep growing and really building the category. I think for us, and what I underestimated going into when we discovered the product and that you could tap water from a tree and that it was this natural hydrating drink. I underestimated the challenges it is to be a pioneer in a category and driving that consumer awareness, and how much time and how much capital and really how much that takes versus creating a product that might be a better version of something or a follow along. And I think that we have the unique opportunity because we have so many other parts of our business. We have a B2B where we supply the ingredient to other beverages like coffee to make cold brew maple water. And we have unique opportunities that other beverage companies don't. And we have such potential in the sense that we are creating our opportunity. However, it poses other just challenges of that constant consumer education that has enabled us to change our strategy and shift in different ways the more we learn about building the category.
Yeah. So just for a quick plug for you, where can you buy Drink Maple right now?
So we did go through a brand change. So we were Drink Maple. Company name is still Drink Maple, but our brand's Drink Simple. Have our sparkling product right there. So our sparkling product's brand new, but quick plug. So Whole Foods, Stop and Shop, Shaw's, Market Basket, Roach Brothers, Wegmans. In other parts of the country, H-E-B. You can buy us at some Kroger.
Oh, wow. So you really have expanded distribution. That's great.
We have, yes.
All right. Everybody go out and get some. All right. So Zach, let's turn it over to you. How about providing some background on Elsen and yourself and some of your accomplishments, please?
Yeah. First off, the maple water is delicious. And now I'm super excited to go and try maple cold brew. I've not had that before. So I know what I'm doing after this. Sorry, I drink a lot of coffee for those of you who don't know me. Anyway, so my name is Zach. So I'm one of the co-founders at Elsen. So Elsen we do a lot of like data management stuff for asset managers. So if you're an asset manager, you're buying data from a bunch of different vendors. You need to kind of get that all together, organized, and then distribute it to your, analyst, portfolio managers, systems efficiently. Most of the time that's really challenging. And so what we did was we actually wrote our own programming language for basically bringing all that data together. And now, people can just access it via the API or a UI really, really simply. So a couple of our big clients are like Franklin Templeton is actually our largest by AUM. And with their acquisition of Legg Mason, that'll put them at like 4 trillion AUM in September, which is absolutely insane. Super awesome that they're a client of ours. One of our other big clients is Refinitiv, formerly Thomson Reuters, so one of the largest data vendors in the world. So we've done a good job of getting some of these really large marquee accounts, which we're super excited to buy. And now we're just continuing to grow that. In terms of some of the other metrics, we've raised a little over 6 million to date. We've got, clients literally all around the world, which is super exciting. And I guess, I know we're going to talk about the negatives of COVID in a minute, but one of the actual positives kind of from COVID, we actually saw from our existing accounts over the past 2 months, we've seen a 3x increase in number of conversations that they've started with our team. And what's actually nice is our team has actually closed them 50% faster. So our team has actually done better at responding to more messages from our clients. And we actually saw a couple of different teams within some of the organizations. We saw one team increase their usage by 4,000 times, literally fantastic. Over the course of a month. Yeah. Right. And that was, super amazing and exciting for everyone on the team because it demonstrated, truly demonstrated the value prop that we're going for, right? Which is when the markets are all over the place, you have no idea what's going on and you actually need to test more ideas, right? To play with more data. You can do that with our system without doing anything, right? It just works, right? Which was great. So we were very, very happy with that. And the fact that even with a literally 4,000 times pickup, the system didn't break, we were happy. So,
that's great. Great progress. And Franklin Templeton is fantastic. So kudos for you. And Lyle, how about you providing some insights into your business, please?
Yeah, sure. So my name is Lyle Stevens. Also one of the co-founders of Maverick, one of 4 co-founders, all from Northeastern at varying degrees of time and our Maverick and Northeastern journey, I should say. And for those that don't know Maverick, we are a enterprise SaaS platform that helps enterprise consumer brands perform what we call social proof at scale. Many folks understand that as influencer marketing. So creating photos, videos, blog posts, ratings and reviews, referral links, basically any way you want to activate a person to share something on behalf of a consumer brand, our software helps automate and scale that. And so we work with some of the largest brands in the world, Whole Foods, Walgreens, Reebok, Shark Ninja, just to name a few. And we have hundreds of brands now across dozens of verticals, which is pretty exciting. I'm really excited about this talk. So thank you for having me, Bob, and Kate and Zach. Great to connect with both of you as well. Because COVID has been really interesting for us in a lot of positive ways. And I can't wait to share those, but also in a lot of learning ways. We have a saying at Maverick, either we win or we learn, we never fail. And so there's been a lot of learns at Maverick as well. And I never really thought I'd find myself in marketing, to be honest. I studied business and computer science at Northeastern, graduated in 2009, followed my co-ops and went to Raytheon Company and did a leadership development program there for 2 years, rotated around the company, learned a lot from people way smarter than me, and found myself as a product manager in cybersecurity and was helping manage a secure social network inside of Raytheon, and came up with the concept of helping identify subject matter experts within an enterprise context. And a subject matter expert to us was someone who was getting likes and comments on their posts about radars and missiles or whatever they were building, right? And it was out of a security initiative, right? We didn't want folks talking on Facebook or LinkedIn about what they were doing at Raytheon for obvious reasons. Mm-hmm. And so that was my day job, and came home now almost 8 years ago. That's not when we started Maverick, but was inspired 8 years ago. I was sitting across the Thanksgiving dinner table from my family, and 2 of my 3 younger brothers were arguing over who was cooler on Facebook. And being the data geek I was, just used their more open API at the time. We all know that because of Cambridge Analytica. Pulled down their likes and comments and said, Alex, you're full of crap. Sam is definitely earning more engagement than you. Let's cut this argument. That was like my Saturday project after Thanksgiving. Came back to Boston, got together with, Sean Nagley, Chris Wolfel, Schwab Mogel, all from Northeastern, and, went through IDEA, got some amazing support from the Northeastern ecosystem, and then pivoted the business with the help of Techstars from a more B2C consumer angle, formerly known as SplashScore, and pivoted to what is now Maverick and more of a B2B SaaS angle with the help of that Techstars program. And the rest has been a fun ride. So the last couple of years, we've been doubling every year for 3 years. This year will be a little bit lower, but still decent growth. We have over 50 employees. We have an office in Denver now. And as I mentioned, we have hundreds of brands across dozens of verticals and have raised a decent amount of venture capital. So it's been a fun ride for us. And COVID has been a blessing in disguise in a lot of ways. And I can't wait to share more about that.
Great. Well, it's tremendous progress you've made. So, but let's stay with you. So all of a sudden, COVID hits, the world says, let's stay home. This unbelievable economic crisis. How did you react? I mean, and I'm sure you took a number of actions. A lot of companies laid off employees. A lot of people were worried about losing customers. How did you react to this? How did you respond?
Yeah, so we did a number of things like most customers or most people. We were fortunate in that in the fall of 2019, we actually refocused our business squarely on the enterprise consumer brand because we had experimented with expanding our TAM, or our total addressable market, and going down market to smaller brands. And unfortunately, that experiment didn't pan out as well as we would have thought. There was just a higher churn rate with smaller brands because they weren't doing influencer marketing all the time. They were doing it around product launches or key holidays, like tentpole moments in their marketing plan. And so selling SaaS to someone doing, sporadic activations didn't make sense. And so we pulled back from that experiment and actually made adjustments to our burn and our team back in the fall. And so our board likes to joke that we saw COVID coming and we were very intelligent and made adjustments before the pandemic. And so fortunately, continue to knock on wood, we didn't have to make any furloughs or reductions in force. And even though we did lower our forecast, so we did lower our forecast like a lot of companies, especially in marketing, because marketing budgets are usually the first to get frozen in a downturn. And we lowered our forecast by more than 50%. We were pretty aggressive to plan for the worst but hope for the best. And as of today, we're actually double that forecast through this quarter. So we've actually seen a greater deal of resilience than we thought, and that's because of the enterprise focus. A lot of the hardship, I'll call it, that we've seen in the marketing industry has been with smaller brands or agencies who pulled back more. But a lot of the enterprise brands, Procter & Gamble being another big customer of Maverick, they've actually hit their number well ahead of where they wanted to be and have doubled down on their marketing budgets and shifted budgets from live TV and sports for a lot of obvious reasons and experiential for a lot of obvious reasons into digital first initiatives like influencer marketing, social proof. So that's been great for us. We've also, while lowering our forecasts and just being prudent with that decision, we also sought to go on offense where appropriate. And so we were leaning pretty heavily into a COVID first messaging and go-to-market strategy, doing a lot of webinars and helping brands help their consumers cope with the challenges of COVID and stop selling and start being solution-oriented in their messaging and use influencers to promote that solution-oriented messaging. And that has paid dividends for us and allowed us to lead from the front as marketers and marketers and influencers should, because what makes someone a great marketer and influencer is that they have a pulse of what's going on in culture and society, and they help move culture and society through the turbulence of pandemics or civil rights resurgence, things of that nature. And so we've leaned into both of those things, and that's also helped us. And so while lowering forecasts and playing a little bit of defense, we also sought to go on offense where appropriate, and every month we'd reevaluate what bets we would take from a go-to-market standpoint or a hiring standpoint. And, playing both sides of that coin have worked pretty well for us.
Well, that's great. Well, I'm glad you saw the COVID coming before the COVID came.
I wish that was actually the case, but
I wish you were in Washington, but that's a different story. That'll be another webinar I do at some point,
Totally.
We'll get so Zach, let me go to you. So we were talking about some opportunities that have happened through the COVID with your customers, but what was the reaction day one? And what were the changes you made in the business right away?
Yeah, I mean, so the bigger issue for us, I mean, similar to Maverick, we go after enterprise clients, like our accounts are large asset managers. The biggest issue for us was actually just the market uncertainty. I mean, I don't know if everyone was paying attention to the market, we literally had like, within the same day, the 100-year high and 100-year low is just like, what the insert curse word is going on. So that was actually the biggest issue, is just like every time we would try to reach out to like an active client, they would just be like, yeah, we need to, chill out for a little while and just figure out what's going on. So we kind of just took that time to actually reset all of our sales materials, and again, we saw really good information from, clients being really active. And we have a lot of really good data demonstrating how we can help clients save money. So we spent a buttload of time basically just making that really, really nice. So, making really good calculators showing that like, hey, in the first year, not only are you going to be able to use the system to generate more things, but we're going to also save you, 500 grand. And we're going to save you that every year going forward. Right. So we kind of just like took that opportunity to just kind of like get things settled. And then I guess kind of from a management level, we were super mega hyper transparent with everyone on the team. Our team is a lot smaller. We only have about 15 people. But, between everyone on the team, like we sat everyone down, we're like, hey, here's kind of where the cash is at, here's kind of where things are looking. There's still a lot of things that we need to do. We're lowering the forecast. Here's kind of the worst case. We don't actually think it'll be that bad. And then we actually got like complimented by the team on how transparent we were being on all that stuff. So everyone was really, really happy about that. So, for us, it was making sure that everyone on the team was super happy. Again, we doubled down on all of our existing clients and then just kind of like cleaned up all the stuff while we kind of had a little bit of time. And then switching to working from home wasn't really an issue for our team. Like a good software business, everything we have is software based. So,
given that you work with historical data, how did you handle this unprecedented history in the market? It's like, how do you sort of give advice or data analytics on something we've never seen?
Yeah, that's a great question. So one of the great things about our platform is we can actually ingest new data very, very quickly. So there's actually a number of different vendors that have data that works with COVID, right? There are COVID specific data sets that people have never played with before because their systems literally don't let them. So what we did was we integrated with a whole bunch of those, and during any client demo, hey, you want to play with some new data that you've never seen before? Here's how it could actually affect you right now. Oh, and again, we're also going to save you a ton of money, and everyone on your team was going to be significantly more effective.
Good pivot. Good move.
So,
and Katie, what happened to Kate? What happened to your business?
Yes. So similar to Lyle, we thankfully had gone through some shifts and changes. Earlier, we went through some SKU rationalization and had cut some products in our portfolio that just had a very high cost of goods. And so we were thankful that there were some of those budget changes and some financial changes earlier on. Some people on the team as well, we had just parted ways with. So it was going into COVID, we felt like we were in a better position to handle it than we probably would have been about 6 months prior. I think for us, we had food and beverage. It's been an interesting just journey. I mean, we were thankful that we have a shelf-stable product, so we are able to sell online and via Amazon and then our website. But all of our marketing, or not all, I shouldn't say, we have digital marketing, but most of our marketing is really in-store and doing in-store samplings and field events. And that's where we find really loyal consumers. And so when COVID hit, all of that had to stop. We still don't know really when it's going to pick back up. And quite frankly, I don't know how I feel about spending money to have someone sample in a store where most people are probably going to say like, I'm all set. I don't need to try your product right now.
Yeah, so only 30 people drank from this can. Don't worry about it.
Exactly. And so even, I mean, it hit the news that Costco was bringing back samples, but then you peel back the onion and you realize that this is a little bit embellished with the media and it's not, really true. And so for us, we had, we also had to make the decision. There were some beverage companies that really furloughed and let go their whole sales team. We had to walk the line of, we're going into these stores as sales, there are salespeople are going into these stores and some people didn't feel comfortable. And we had a bunch of people that actually were hourly and they didn't feel comfortable going into the stores. And so it was a really self-made decision for them that they weren't going to work. As a small brand, we couldn't afford to pay salespeople that are sitting at home because they can't do anything at home of what they're supposed to be, executing. So the other challenges we saw, I think that is you look at the numbers of food and beverage, a lot of the established brands, similar to what Lyle was saying, a lot of the established brands, the enterprise brands, it boomed. Things were, people were hoarding, they were pantry stocking, and really where the emerging brands and smaller brands like us suffered was that we weren't getting, there were all these supply chain issues, there still are with the distributors, and the smaller companies weren't getting delivered to the stores. So our sparkling product, which was distributed through a very small local distributor, that was showing up, but our other products that were through this huge distributors that weren't. So we were just dealing with all these supply chain issues, and still are, it hasn't corrected itself. And so we shifted, we made the decision that we were going to do what we could to support the stores and make sure that we were getting product to the stores, but we were shifting online. So our e-com business, Amazon and Shopify, the positive of that, it's grown over 300%. We were able to shift and, without doing promotions, we were able to do some fun giveaways with different swag or supporting other small businesses by including them in our orders so that other people were exposed to small brands like us. And so that has really helped, given all the volatile nature with the retail and then with alternative channels too. It's like colleges and universities, we lost all that revenue. We lost revenue from where we were in gyms and coffee shops and things like that. So the shift to online, I was, counting our lucky stars that we were shelf stable and that we didn't have a refrigerated cold chain product, because those beverage companies are really, really struggling. It has not been an easy road over the past few months for them.
So just percentage-wise, do you think you're off 10%, or do you think you're close to where you were?
Yeah, so e-com was a smaller part of our business, and so like I said, that's up 300%. Our retail, though, that business is down about 40%. That's up. That's climbing back. I think that, promotions were stopped by the stores. We've just faced out of stocks. It seems right now that we're getting somewhat back to normal, but data is lagged as well. So we can't get constant updates with that data, but based on shipment reports, we're getting somewhat back to normal.
That's great. I'm glad it's improving. So let me, you're all dealing with professional investors. You all have venture capitalists as investors on your board. I had the pleasure recently to speak with two VCs, one who presented in my grad class, and his advice to ventures were that he's been providing to his portfolio companies was, you need to cut your burn rate so that you have 18 months worth of cash, and cut your revenue forecast by 40%. And if you had any new hires planned, you shouldn't hire. The other VC, who was actually was a member of a panel that we hosted a couple of weeks ago, he had a similar message, but he was also talking about, you need to be bold and you need to re-engineer your company, take advantage of these opportunities that come in as a result of COVID. And, it seems to me that when I listen to Lyle, it seems like, Lyle, you've been able to take advantage of some of these opportunities as more people started to move into sort of social, reallocating monies into social platforms as opposed to, on-site physical platforms. So how have you, what have you been hearing from your investors, and so how have you reacted to them, and how are you taking advantage other than some of the opportunities you talked about as far as the shift in money?
Yeah, great question, and something I alluded to a little bit already. We did both. We lowered our forecasts, managed expectations accordingly at the top line, and really set a message at the board level that because of the uncertainty of the greater macroeconomic climate, we're going to forecast quarter to quarter. We're not going to try and put an annual number out there and just sort of go quarter to quarter. And then internally, we're actually going month to month. And depending on how we're pacing, I'll release additional investments or what we call bets internally, whether on the go-to-market side or the hiring side or the partnership side, to try and make a difference piece by piece, right? So we're sort of going month to month internally on that regard. But what we've been excited about, and you sort of alluded to it, Bob, is that the pandemic has accelerated the digital transformation that was already happening for marketers, especially on the enterprise level. We were already seeing more brands and marketers turn to people first based marketing tactics and channels, and live events going away, as Kate mentioned, in-store sampling or just experiential based activations going away. And because of live events and sports, TV spending also shifting. That's accelerated all the digital first for us. And in addition to that, within the influencer marketing ecosystem, we've seen live streaming, whether it's on Instagram, YouTube, or Twitch, who has definitely built a great little niche within gaming and is now expanding outside of gaming, mainly into music and entertainment and sports, and a little bit of food and bev, actually. We're seeing live streaming be an incredible opportunity in white space for marketers to get pretty efficient business gains relative to other marketing channels and tactics. And so we've been diving headfirst into live streaming. The other piece of this is TikTok. TikTok was already on a tear, and that tear has just been accelerated as a result of the pandemic, because more folks are sitting at home, more folks are not going outside. They're consuming that video content like you could not believe. And as a result, the engagement rate and the dwell time and the time spent on influencer generated creative assets are doubling since pre-COVID. And it's just resulting in an ROI and an efficiency that is really unprecedented within our category. So it's been a fun ride. We were already on a wave of growth with influencer marketing, going from an $8 billion industry last year to its forecast to be a $15 billion industry in 2022. That's just getting accelerated as a result of COVID. So needless to say, it's a lot of fun, despite all the terrible things that are going on in the world. Pretty grateful and fortunate to have some of those opportunities. And then as a result, at the board level, we're also trying to figure out, is there an opportunity to look at inorganic growth strategies as a result of this? Because there are other either adjacent companies or competitors in our space that maybe didn't have the right customer mix or product mix, that are feeling the crunch of a top line coming down and a retention challenge, and that cash crunch is making them a little bit more vulnerable. Can we scale up even faster inorganically, in addition to organically, as a result of COVID? And so that's the playing offense conversation that we're having at the board level also.
Yeah. Well, it sounds like your board has been super supportive and telling you to be bold. So that's great.
Yeah.
Zach, are you getting that too? You said you just came off of a board call, so what are you hearing from your board and investors?
Yeah, like Lyle, they told me to use TikTok more. That's completely agreed. Candidly, our strategy is a lot more simple, right? I mean, our company is, so we're at 15 people. We're pretty focused on, closing up more of these larger asset managers. Like we're a pretty boring one. Candidly, we were definitely kind of at like a weird spot in terms of the fundraising though. We were able to cut a bunch of things, and, everyone's working from home basically probably forever. And, I imagine we're probably not going to be very sensitive about where people live going forward, which is actually great because we'll save a bunch of money on a bunch of things and get people for cheaper. So like I think similar to every single company in the entire world, we, cut our forecast, decrease our, costs. And now we're just kind of seeing how those things are changing. Right. So yeah, we'll probably do some additional financing later this year based on, some of these new milestones that we're hitting.
Generally, they've been cautious, but, supportive.
Yeah. I mean, I remember we had a board meeting, or I think I had like 6 board meetings or 6 board calls, in March, and we presented like 16 different financial scenarios, like based off of, different growth levels and cost scenarios. And right, based off of this grid, we could start here, here's kind of the middle ground. Great. Now we can move here based off of, how things are looking in the next 2 days, and then in the 12 minutes after that, we can move to this other bucket. And yeah, so we were, relatively kind of on top of that. And again, we tried to communicate that very clearly to our board as well as to the team about how we were evaluating all of those things, what we kind of needed to move into the next sort of like block. And again, because I think we're still trying to figure out exactly what COVID means. Yeah. And again, I know the political webinar is the next one, so we don't need to dive into that too much.
We'll get into it though. But you were talking about, your engagement with customers had picked up a lot, touch points, et cetera. So how did that happen? I mean, did you see an opportunity where you could create these touch points, or did the, customers start to realize that there was more opportunity building off of your platform that they should take advantage of?
I think it was a combination of both. I mean, in March, as kind of COVID was starting to become a much sort of bigger deal, I think, we were like, okay, the things that we're going to focus on are make sure that everyone on the team is, happy and healthy, right? That's critical, because if you don't have a good team, then you're in trouble. Then make sure that our existing clients are, happy, right? Because worst thing that you can do in a downturn is lose your existing clients. If you lose your existing clients, you're really messed up. And then the third after that is like, okay, if we can get additional clients during all this crazy stuff, that's great. So, we basically reached out to every single one of our clients, multiple times kind of within March and April, or, February, March, April. But then we just started seeing their usage just skyrocket. And a bunch of that was, there were some specific teams that just drastically increased the amount of data and analytics that they wanted to process. Because one of the common sort of applications for our system is, once you've kind of created a research idea, you want to run that in production, right? And let's say you've got a portfolio, great. Before maybe you needed to look at it every week to kind of see what is going on and, analyze it and see if you need to make changes. Well, when, the world is on fire, maybe you want to do that like every hour. And you want to do that, across a couple thousand instruments or across a couple different strategies. And then you've got a bunch of new research ideas, and, you do the permutations of that, and you just increase your amount of data by 400x, right? It's not actually that hard to do it, but these were things that these clients could not do before our platform. And, this is just kind of making them recognize it more quickly.
Yes,
so
a greater value.
Yeah. And I know there was a question that I'll just quickly answer about, pricing. So we actually already price our platform based off of the number of users, and we charge people at the end of each month. So we sign clients up for multi-year contracts, but then we charge them monthly based off of that usage already. So what's nice is we kind of already had that sort of baked in. So now we can see increased revenue from that.
Great. And Kate, you've been probably it sounds like the most impacted, probably because you're the one that's selling to consumers, or it's a consumer product. And so now you have this, it sounds like one investor was Cleveland.
Yeah, we have a bunch of investors, but they're our main VC.
How did they react?
So I think similar. I mean, I'd heard that similar to what you had mentioned earlier that the advice should be, have 18 months of cash and runway, and that advice was going around among the food and beverage entrepreneurs, and we all just laughed. Like, there is no way we're food and beverage. Somebody said food and beverage are already on fumes as it is. And so to be able to have to think about 18 months and cut spend for 18 months is very difficult for most emerging food and bev companies. And we were also impacted. The people that bottle our product, they jacked up prices as well, just because of all of the different precautions they had to take. They had to hire 3 nurses on staff. And so there were costs going up on our end. So we cut our forecast to be very conservative. One of the things in the industry too that has been, I mean, we're seeing it across the industry with the WeWorks and Outdoor Voices and things like that, of these companies that this unicorn status is now being relooked at. And so in beverage, for sure, there is this mentality of growth at all costs and top line focus, and a lot of beverage acquisitions, the brands are never even close to profitable. They're hemorrhaging cash, hemorrhaging money, because in the valuation and the multiples are, very big if you have that strong top line. So when COVID hit, it was interesting. There was a lot of talk of saying, like, this era of unresponsible growth is over. And this is not a time to try to show off sexy growth numbers. This is a time to really look at your P&L and create more of a stable financial business, because the thought, especially in the industry, is that, I mean, there's so much competition. There's numbers that like 4,000 new beverages are started each year. I mean, most people never see those beverages, but those are the types of amount of new companies that start. And so the message was, get through this, come out on the other side, because there are going to be so many beverage and food companies that aren't going to make it to the other side. And not the big brands, but smaller emerging type brands, because it's going to, the fundraising, there are definitely fundraising deals that are happening for sure, but just overall the investment landscape, similar to what Zach said, everyone's like, whoa, I just got to figure out what is going on before we even talk about investment deals, figure out what their current portfolio companies needed to get through this. And so for us, we've just taken a conservative approach in making sure that we can focus and drive sales where we can, and make sure that, we're able to get through to the other side and be, in a position that we come out of this, stronger and better for it, after learning just a lot of lessons.
It's, as I look back at my career, the thing that I always remember most of the times that I overcame some stressful situation. It's probably the best memories in many respects, and the best learnings I had as an entrepreneur. Mm-hmm. So, I remember very specific instances in all the companies I was involved in. And as much as I was thrilled that we sold them and had good cash outs, it's the memories of the stress and how I coped with the stress that was made them kind of very interesting for me personally. So I hope you celebrate these stresses in later in your life,
I think the interesting thing, just to add to that, the interesting thing with COVID was that as an entrepreneur, I think you're on a roller coaster all the time. There's so many different stresses, and you always are having something that you're dealing with. And the interesting thing with COVID was that every conversation I had, we were all going through this together. So everyone understood and you could relate. And I think as an entrepreneur, sometimes you feel alone because you're dealing with something, you're like, no one understands what I'm dealing with. And with COVID, everybody understood. And so I don't want to say it made it easier, because this is so unprecedented and people are dying and this is very serious, but I think that it was easier getting through it, that I felt less alone in the struggle and in the obstacles of what we were dealing with.
That's good. So let me just check with Debbie. I haven't been checking the chat room, but are there questions for the panelists, please?
There are actually some that have been sent directly to me.
Okay.
And one of them, sort of build off what Kate was just talking about, is who do you go to for advice during these times?
Do you
Whoever
want me to
wants to start.
So Kate, why don't we
Yeah,
start with you?
I go to my dad. So I think my dad, I get the, he's been in the business world and gone through obstacles. And I think he offers, for me, it's a really good experience of like business insight. And then also being my dad and offering that comfort of, you'll get through this. And so, I also have advisors and things like that, but I think when this immediately happens, that's why I was like, Dad, what do I do? Do we need to let everyone go? I mean, what do we do about this? And so he offered a grounding guidance, and always, I think when I get anxious or panicked, he has a really grounding voice for me to empower my thoughts and take a step back to really look at how to approach the situation. So I feel very fortunate to having him to help that. And then specific industry advice, I go to some of our advisors that are, can speak specifically to the industry.
That's great.
Yeah.
So Zach, are you going to Kate's father also?
Sometimes, but he's been ignoring me recently. I think that's because Kate's been talking to him.
I take a lot of his time.
That's funny. Yeah, no, for me personally, I mean, I also have an executive coach that is super helpful. So I feel like, I have a pretty good relationship with most of our angel investors in our board, and like I talk to them about my personal life and stuff. So I've been able to talk to the board and the rest of the management team for any of the professional stuff. I feel like that's actually worked out pretty effectively. Most of the time I'm also an introvert, for those of you who don't know. So I usually just have a beer and think about it for a few hours, and that's usually how I deal with things. And then I talk to my girlfriend because she enjoys talking. So that's usually what I do.
Good.
And she's much smarter than me. So that helps. Sorry, is that okay, Bob?
No, I was waiting for you to grab a beer. That's all.
Oh,
Debbie, let's address some of the other questions.
I don't know. I kind of wanted to hear who Lyle goes to for advice.
Oh, okay. Lyle?
Similar to both Kate and Zach, plus some others. So I also go to my dad. He's unbiased, or maybe biased, but unbiased because he doesn't know all the intricate details. But he's also a serial entrepreneur himself and understands tech and SaaS, and so that's been helpful. I also go to my wife, who also works in marketing and PR and influencer, so she has context of what's going on in the world too, and so she's my rock for a lot of this stuff. I do have a peer group of other CEOs here in Boston that I talk to pretty often. And I also leaned a lot on two advisory groups, our customer advisory group and also our influencer advisory group, to get a sense of what both sides of the market are seeing and hearing, and doing lots of surveys and lots of Zoom calls and webinars with those constituents to understand like their worlds, and making sure I was being empathetic to what they're dealing with, and not just what our Mavericks needs and our employees needs, or our squads needs, we call them, and my personal needs. So, keeping a pulse of what your customers are going through has really helped us a ton, and being customer centric with our decision making.
That's great.
Great. Thanks, Lyle.
Of course.
Another question I'm getting is, what are you doubling down on right now?
For us at Maverick, it's TikTok and Twitch, as I mentioned. I think the emerging social platforms, and one has an API which makes things a little easier. One does not have an API, which makes things a little challenging from a SaaS and software perspective. But I think those would be the two that come to mind. And I would say just continuing to double down on enterprise focus. As I mentioned last year, we tried to go down market, didn't pan out as well. And we're just, I wouldn't say blinders on, but just extremely focused on enterprise consumer brands. And whether it be as some of the brands I mentioned, but General Mills is another big one that has just been, exploding through this and, helping them.
Yeah, definitely focusing on a fewer number of clients or a fewer number of prospective clients that have a larger potential revenue is what we've done. And then, just doubling down on those statements about cost savings and increasing of usage. I've said those words on so many Zoom calls. It hurts my brain to think about.
One other thing I'll add that I forgot to mention personally is, in helping customers deal with the challenges of COVID, or helping customers help consumers deal with the challenges of COVID, we've actually launched an initiative called Cancel COVID with a couple of entrepreneurs here in Boston, where we're leveraging influence and influencers to spread the awareness of a really unique symptom of COVID, which is the sudden loss of smell or anosmia. So that as states start reopening and we start wanting to go back to normal, we have an early indicator that if you lose your sense of smell, you should probably consider not going to that restaurant or going to see your friends. And, believe it or not, less than half of Americans know that that's a symptom based on some surveys that we've done. So we're also trying to be a part of the overall solution for society wherever we can, because we think we have the ability to help there. And that's been fun too.
And we are doubling down really on digital. So as similar to what Lyle said with TikTok, we've done our first ever and partnered with some registered dietitians, nutritionists, and different influencers or athletes to create content on TikTok. I can't even believe I'm saying that. I think a year ago, I was like, what is this TikTok thing? But so we are doing that. And then also on Instagram as well, which, we've always done, but we realize more and more people are on their phones. I don't know if anyone is personally on TikTok, but there was during COVID, there was this emerging of like, oh, hey, I'm the new millennial here on TikTok. I'm the old person. And I felt like it was true. It was so many more, for us, Gen Z is a little young for our target consumer. So I never felt like we should be on it. And then as everyone's home on their phones and more people are getting on, it became obvious that, if we didn't get on soon, we were missing the boat. And then doubling down really just on our Shopify, so our drinksimple.com site and Amazon, and making sure that our paid ads, we don't do a ton of paid ads digitally, but continuing to do that to get people to sign up for a newsletter, get people sticky to our site, and then be able to market digitally from there.
Great.
I feel like based off of your guys' feedback, I should go and talk to my sales and marketing team about using TikTok to go after like hedge funds.
Yeah, I think that's a great strategy.
Actually, Zach, you say that, but a growing cohort of TikTok accounts are folks talking about the market.
Terrifying.
So, believe it or not.
I do encourage you to just like get on and see what people are talking about, because I thought it was all just dances. And like you said, there's a lot of other people talking about different things that really surprised me the more and more I was on it.
My only issue with TikTok is just the like security features. Like I feel like I need to go get someone. I'm going to go get Lyle, give me your phone. I'll use your TikTok. And then,
Well, as soon as I learn how to spell TikTok, I'm going to get there. So Debbie, any other questions?
Yes, for the 3 minutes left, so just a quick answer from each person. How much time are you spending right now on planning for the short term versus the long term?
Hi.
Okay, Zach.
That was my short answer. We significantly more is on the short term. I mean, especially the next like 3 months is where we have significantly more detail around what we're looking for. The clients we're going after, all that stuff. So like, I mean, we have a 5-year forecast and a 3-year forecast and, all that stuff. But I mean, again, I think just given the continuous uncertainty associated with COVID, that could all change, you know, like it did 3 months ago. So short term, high.
I'm probably the other side of it. We're planning, well, I should say the near long term. So we're going through package design changes right now. So more things that are going to be released in the fall. We're changing places where we're packaging. We're going through just a complete brand project, brand purpose study that we are finishing up. So that's going to influence our marketing strategy moving forward. And then obviously have to deal with the short term, but a lot of the things that different distributors that we're looking at. So I am spending time in the near long term, not like 5 years, but end of year type stuff.
And real quick, as I mentioned, on the business side, we're going quarter to quarter with our board and like month to month internally. But what COVID has done for our team and our squad is that, you know, the growth trajectory of the company changing a little bit has resulted in us having more thoughtful conversations internally about learning and development and what they want career-wise, and making more long-term plans for their career trajectories if Maverick can't support what they're looking for long-term because of the change of certain trajectories like that, pull away from SMB and refocus on enterprise. And so I said from a team standpoint, we've done more thoughtful planning for, you know, 6 to a year out with the team, and that's been met, has been met well with that team, and they've been grateful for it. So
Great. Well, I need to thank you all for a great panel, your insights into how you've been responding to this challenge, but what personally was thrilling was to listen to the successes you guys have and how you've all reacted to it. So I applaud you all and thank you again for participating. Debbie?
Yes, I echo Bob's thanks to all of our panelists. That was fantastic. And I probably speak for all of us when I say thank you to Bob for getting these great panelists together for us and for once again moderating a fascinating session. Thank you to all who have joined us and participated today. Hope you enjoyed it, and wanted to make sure you knew about our next COVID-19 resilience talk, which will be tomorrow at 4 o'clock, about the power of mentorship. So we hope to see you there, and everybody have a great evening. Thank you.
Thank you.
thanks, everybody.
Thank you.